Good morning, everybody. Happy Monday. Welcome back. This is Chris Pulver trading. It's just after 9 o'clock on the 19th. We're just a few minutes away from opening bell. Take a look at the currency chart this morning. Pop into the chat, say good morning, say hello. Big move on the Japanese yen overnight. Probably not a good sign for the markets. Japanese yen starting to be a little bit louder and crazier. We did suspect this if we're going into our currency pairs. Doesn't look like a lot, but it was fairly noisy. 98.95 to 97. That is around 185 pips right there, about 180 pips. So just look at the pullback zone, right around this 38250 zone. Doesn't really show a lot of direction. It is a lot of pips, not a lot of direction, but take a look and see that we had a run up and coming back down. More and more volatility. I would say this is good for the short-term trader. If you're looking at a swing trade, just make sure you have proper trade sizing because who knows, right? I mean, I do think that it's going to be an interesting spot to see a decent sell-off. I mean, high, low, lower high, lower low probably makes sense to a lot of traders out there, especially after a big swing of 1 to 2,000 pips. A lot of these were close to 2,000 pip swings over that late July into early August move. That drop was 1,935 pips on the Aussie yen. If you go into CAD yen, a little bit more pronounced on the sell-off since we had a sell-off on Friday, a little bit more follow-through today. So right around that 38% of the CAD yen. Swiss yen, also a pretty shallow pullback around the 30%, looking to see if we retest lows. I have a pending order on the Swiss yen around the 55% pullback, so I'm going to label that on my chart. Let's do this for a short position, 55%. Stop loss above and going after my appropriate swing just shy of this one. I did like a 159 handle for my stop loss. So looking for that swing on the Swiss yen. Euro yen, same thing, right in between that 382 and 50. Couple ways this plays out, in my opinion. So we have a high to low swing. We push back in that 30% zone. I don't think that we immediately necessarily come all the way back down to the same low right away. I think we might have this pushing up, maybe a pullback, maybe one more push into these levels, getting into this kind of 50618 zone. Then we look to see what the bears are made of. Maybe it's a trend line break that way. Ways to participate, getting some confirmation, stop loss above, moving stop losses to break even. Just getting some good alignments, getting some good entries, good trade sizes. Don't overstretch, don't overtrade, don't over leverage. Certainly not in the yen, because you never know what this thing's going to do. Let's go overnight to see what the Nikkei did. Finish up these currency pairs, pound yen, same thing, roughly right around that 382 zone. New Zealand yen, right around that 382 zone, and dollar yen, just shy of the 38% pullback on the dollar yen. Let's go to the Nikkei right here. Nikkei overnight was in red. So we have been noticing this this is now almost a month. A weaker or bearish move on the Nikkei is a stronger move on the Japanese yen. So, yeah, I mean, the Nikkei pulled back about 61%. I'm curious if the kind of drama unfolding here with Japanese yen, Nikkei, if this, which certainly carried into the U.S. stock market that Thursday, that Friday, that Monday, the 5th, if it starts to seep back into the U.S. market, we're not quite sure. News-wise, things are a little bit lighter on the calendar, but it is starting out with the Jackson Hole week. We have FOMC meeting minutes. I'm just talking U.S. data here. Meeting minutes on Wednesday. Believe that should be 2 p.m. Yeah, 2 p.m. Eastern time on Wednesday. Thursday, PMI numbers coming out of the Eurozone and of the U.S. Jackson Hole starts on Thursday as well. And Friday, we have Jackson Hole Day 2, Powell speaking, CAD retail sales, home sales for the U.S. And yeah, I mean, it's going to be a price action week. There are a couple of companies that I wouldn't mind. Let me check on something here. There are a few earnings plays that I wouldn't mind taking a look at this week. Pop these up here. So Some notables. So this will be a good week for the consumer. Housing for Toll Brothers. See what that does. For the consumer, how healthy is consumer? Here is Target and Macy's on Wednesday. Snowflake, if you want to get in the AI space, Zoom, pretty beat down stock post COVID. Ridiculous how Zoom was up to highs 2020, 2021, and big correction, obviously. Baidu, I do have some exposure there. I actually own some shares of Baidu. Peloton, health of the consumer. Maybe Peloton has some news as another one that's been struggling a lot. BJ's Wholesale Club, that's a lot like Costco, Sam's Club. Intuit, this is for small businesses. Record keeping, books, QuickBooks, things like that. Their stock, it's like a $650 stock that has a fair market value around $1,000. So curious to see how that one plays out price action wise. So would I take some trades this week? Possibly. Yeah, I think there's a couple of earnings plays I might consider. Watching some levels, chart alarm set. Baidu, I'm watching. I think I own shares of Baidu in the low 90s. We're trading like 85, 86 last week. They do have some pretty good cash flow. I think fair market value on Baidu is up in like the $140, $150 zone. Let me check. Let me check on BIDU. Yep. So screener wise, it looks decent. Below estimated value, forecast to grow, earnings grew, traded good value, and their discounted cash flow model, they're trading at 11.6 times earnings and fair value 225. So, is this a guarantee? Not necessarily. Times are going to have to get a little bit better for China, I would think. And I wouldn't mind having a, 200+% gain. It's pretty decent or close to it. If 240 was fair value, that'd be a 200% upside, which obviously I'm happy with 100% on anything, but nearly 200% is pretty solid too. So Baidu, Baba, some exposure there with China, FXI, KWeb. Those are kind of my top four ways that I'm playing it. All right. Who's in here this morning? Say hi. Gary, good morning. David, good morning. Chris, good morning. Good morning, everybody. Sorry for the couple minutes late start. I had to jump back into Restream. So Restream allows me to hook up all my channels, and for some reason, like everything was reset. So I had to type in a new description, link up all my channels again. So that's why it took a second to start up. All right, so there's our currency update, Japanese yen. Take a look at the dollar index for a moment. Dollar index. All right, I had this chart alarm go off last night. Took a look. Keep an eye on this dollar, okay? Keep an eye on this dollar for this reason. I don't know how many traders out there are short. The levels I was watching, 104, 103.90. If you're a bear, that was a pretty good opportunity to at least be short in the near term. The bigger break for me is just it's right here, but I want to see a daily or weekly candle follow through. Obviously, a weekly candle is going to take all week until Friday. But if we see daily pressure to the downside and this thing's making a run towards 101 or 100, then the market may be pricing in this rate cut cycle by the Fed. That's another thing we're not quite sure of this week is, how hawkish or how convincing is Jerome Powell going to be if he talks about monetary policy or inflation data, things that I am watching. So employment news, not looking super great. But I don't think it necessarily matters for the stock market, at least not right now. Couple things. We'll talk about some of the metrics in just a moment. But dollar index, to me, it's two situations. One is that we are making a clean break for it. This is a sneaky, subtle little breakout after we broke 104, a little bit of indecision. But if this continues to work its way lower, then we have a decent trend opportunity on the dollar index and those dollar crosses. And where to? I just look further left. So we have support. We have support. This is a bit of a fake out. We have support. So 101 would be my first big profit target. And then anything lower than that would be if I'm in the dollar for weakness, stop loss, trying to get to break even or better. Obviously you can address your currency pairs individually. But if we get to 101, you wonder if the dollar index is not done there, right? If we take this high to low swing and we have a projected high to low swing, that's actually my symmetry target on the bigger dollar index. So high, low, lower high, lower low. And, I'll put it out there for the bears. If the bears really do run against the dollar, I think a dollar getting weaker is going to be the best situation for the stock market to stay pretty resilient for the rest of the year. All right. Now, that's my case for the bears. Confirmation is still really important to get it. If I sold it, look, if I sell the dollar right now, okay, if I sell the dollar now, I need to make sure that price doesn't come up any higher than probably 103.75 or 103.90. And if it goes lower, great. There's a lot of open space to the downside as long as we can get through this 101 handle. That being said, bull and bear traps, right? If this market is to fake out the downside and then come right back up here, would anybody be surprised? I don't think many of us that have been watching the dollar the last 3-4 months would not be surprised to see all of this structure, support, currently trading near support. If this support holds, or even if we fake out to 101 and then rip back into here, we could still have a wedge trade on the dollar. Now, if the dollar gets stronger, that does not look good for the stock market. Okay? Does not look good for the stock market. So I'm still not convinced I have a clear direction. If and when I do, I'll try to take some stabs at it. Dollar index, important to watch. I would say I'm not trading the dollar yen based on what I see on the dollar index. I think it's going to be its own setup and its own analysis based on what the JPY is doing. But dollar will be important to watch. Okay, if we look at these individual currency pairs, let's go Aussie dollar. Okay, overnight, Aussie dollar is actually up, right? Dollar's getting weaker, Aussie dollar's up. If you look at where we are in the Aussie dollar, though, is there a wide open space to trade? Now, there's been a lot of volatility. I mean, this drop was about 150 pips. This rally here is about 180 pips. So there's been good volatility. Open space would be up above around 6,800. Okay, or down below that little flash crash low we had from August 5th, around 6,350. So if we break down for the bears, I'm looking for 6,000. We break up to the bulls, I'm looking to this high here, back up towards 71 to 7250 or 71 to 7,200. So again, picking our battles. If this is going to be indecisive, then we have to wait, or you're already trading this in the short term. Okay, let's go euro dollar. Euro dollar, from this wedge, looks like the euro dollar is breaking out. It could be a pretty straightforward trade if you're long, right? If you're long euro dollar, stop loss below, look for some follow through. Not a bad trade. Trade what you see, and it looks pretty bullish right now, at least in the short term. Okay, pound dollar. We are making higher lows in the pound dollar, and we do have an equal high up here around 31.30. So if we have another, let's say, just shy of 200 pips, is it possible that we could be pound dollar long, stop below this level? We are making higher lows, right? So trend line like so. If you're long, going towards that level, stop loss below. And if we hit that target, I'd say that'd be a spot to quickly aggressively trap profit, something like that. Yep, I'll take a look at the indexes here. I'm just getting through some currencies with some of the excitement we had overnight with the Japanese yen. So Aussie is strong, New Zealand strong, everything else is very clustered with weakness. But the Japanese yen, also last couple of weeks, if we've seen a stronger yen, we've also tended to see a stronger Swiss, and that's not necessarily the case today. So this isn't like full on risk off trading when the Swiss is not participating in strength. This is probably some more Bank of Japan nonsense, or Nikkei 225, and the attachment with the Japanese yen. So that's all. What would a scenario for the USD to weaken FOMC? The market already knows there's going to be rate cuts. That's part of the reason the dollar is getting weaker. markets are anticipating rate cuts, right? Fed's supposed to cut 25 basis points in September, and once they start, they're probably going to stop. The question is, how many meetings in a row are they going to cut? Is it going to be three cuts by the end of the year for September, November, December? Will we have 4+ cuts going into 2025? I do think once the Fed starts cutting, they're likely going to continue to want to cut. That might change with data. That might change with inflation numbers. We will get another round of inflation data as well as employment data prior to the FOMC in September. So, but this bigger weakness that we've seen since 106 on the dollar, I think a lot of that has been the market is looking to price in some weaker dollar. My question is it weak enough? Is the dollar weak enough to then fall with a swing trade and actually get this bigger picture move, or is this dollar, testing levels and it still stays in a wedge? Right? There's nothing like indecision patterns for the market to sucker in all those breakout traders, dance around to those liquidity levels, and really not go anywhere outside of just you think it's going to go low, you think it's going to break down, but it doesn't. So, I mean, the dollar's weaker for the most part on that anticipatory rate cut cycle, but I still think this wedge is something I have to watch. Okay. All right, so we're good on currency strength. Let's go top down here. So S&P, ES futures held up it held up overnight, nothing crazy. We're trading at 55.86. SPY pre-market up about 70 cents. We've had a pretty amazing comeback. I mean, we've pulled back about 78% of this high to low swing. We've pulled back about 78%. We did leave some gaps to the downside. Let me see if I have any big, let me check my software here. Do I have any large gaps today? Decent gap from Wednesday. That would have been, there's Friday's candle, Thursday's candle. So from Wednesday to Thursday, there's a large gap left there in the SPY. Let me check here. Any big gamma levels for this week? So 554. 553. Okay, so I get a little bit to the downside. Where if we open at 555, I'd see 553 today. But I don't know. It's not a large enough net level on my software for me to say I'm going to be bearish for the day. What I'm going to do is put in. I'm looking at a kind of a directionally neutral trade. It looks like this, where if this is my risk, either going out a couple weeks and having a bit of a reverse iron condor, where if prices outside of a certain dead zone that there's money to be made, or I might pair it with a couple of calendar spreads where it looks something like this. Try to minimize that dead zone by about 50 points in the SPX, then have a profit peak, and then profit there, profit peak, and profit there. Same thing, trying to avoid the dead zone. This only requires about a 50 to 60 point move one way or the other, and then the profit peaks are sitting around maybe 70, 75 points out. So I'll probably look at this on the SPX this week. Maybe price one out of the NDX as well and see if there's a decent volatility as we go into Jackson Hole on Thursday, Friday. Okay, thinking of a 551 call for 407. What's your timeline on that call? You trading longer term? You trading out 30, 45, 60 days? You trading out 0 DTE? What's the plan on that one? So I will probably just put in some directionally neutral trades for the week, something that looks to be closed up by Thursday, Friday at the latest. See if we have some volatility as Jackson Hole kicks off. We don't really have a ton of other U.S. news outside of FOMC minutes. We have PMI on Thursday, so I would say that the market is looking for a reason to keep this party going. It's certainly much closer to the highs than it is the lows, but it wouldn't surprise me if we have a bit of a correction or pause. I mean, that's an incredible rip. I mean, 8 out of 10 days to the upside, and we had a V bottom cup and handle play out here within a couple of days. So we had you can't really see it, but if you go to a smaller time frame, a little bit easier. So I did a video on this the last couple weeks. I mean, if we have this swing right here and a neckline, pull back, project the move. So we, came back at once we got above this level, we were starting to get into the measure move of this inverse cup and handle. We pulled right back to that high from the 31st of July, and here we are sitting right there at it again. So this looks a little thin, and as in typical fashion, it's like, look, the bulls were really excited last week, right? The bulls have been pretty excited with this kind of low. Bears are absent, but if we have one nasty sell day, it kind of probably rattles the market into reality here for a second, and we'll see. You're doing a 0 DT on that? Okay. Gotcha. I wish I had better gamma levels for you, but 551 call. It's in the money. I mean, a 0 TT, maybe. If we open up a little bit, I guess the issue would be if you open up at 555 and you put in that call and we have a gap fill, you're going to lose value right away on that trade. If we hit this gamma level of 553 and we don't actually have an up day, then you lose value on your trade. So that's just my thought. If this was a little bit more flipped, where for me, if this was, all these green levels up here were much bigger, these histograms were much bigger, then I would like the long play this morning. But I will be watching to see if any of these, start to fill up for my 0 DT trades. I like to typically go, for example, let's just use an example. If this was 550 and this one was just a massive histogram down here, okay, and my net size on the gamma squeeze would be 500 plus or 1,000 plus, then I'd probably go out to either a 0 DTE and look to see if it gets pulled in for that day, and you can put in like a 552 or 551, at least have that intrinsic value built into the trade, or you go out to Friday, pay a little bit more for it, but then you have a little bit more time on your side, and you might pay $2 or $3 for something out of the money that trades for $4, $5, $6 within a couple of days. So that's my spot, at least. So yeah, as I said, the last 3 days of trading here, bulls are in control, but man, they just drifted. I could see this market having one kind of ugly day and a bit of a dose of reality just for a second. Fill a gap. It doesn't mean that I'm bearish. I mean, if anything, we're going to see if this buy the dip culture is just still getting crazy rewarded. So if we have a dip here, is it buy the dip once again, trying to test all-time highs? Do we get to all-time highs first? I mean, is it just slow and steady to these all-time highs, and then the market actually sells off from there? So having this as a high and resistance, okay, I'll put H/R for high and resistance, and then back down here, I mean, the market can go sideways. We can have a 10% correction zone where the market's not really convincing to go up to all-time highs. But what a heck of a recovery. We'll get into September and we'll see what the market's made of. But anyway, all right, opening bell. And we're at 554.89. I'm going to get a couple things priced in. Let me see here. Alarm's going off. Got 26 card calls. Okay, good. This is a play that I had this week for China at 26.51. I think my expiration on FXY or FXI is 26.50 out to the 30th. Let me check this here. So let's go positions. All right, so got to look at an SPX trade this morning. SPX, we are at 55.60. Okay, 55.60. That's where I would look to center it. 55.60. Let's see, it can go 40 points up. Not getting a ton of premium for that. Oh man, please tell me I'm going to get more premium for this. That's a big difference. I might move that strike up to 55.95. Then to the downside here, let's go another 15 delta. Ugh. So there, 20 and 0. $1.80. I don't know. I don't think I'm going to take that trade. That premium is so low. I can move this strike up 215 and 240. Ugh, sheesh. The IV is just back to so low. I don't even like the trade. So if I sold the 55.95 by 55.25, credits at 230. I don't know, man. I mean, it could stay there, but something tells me the IV is so low that any type of directional move that I have, if price were to go down, 10, 15 points, it's going to threaten my put side. It's going to be tough to extract. I mean, I'm not looking at a big profit target today either. So I think I'm just going to play both sides. So 2.35 times 0.15, looking at a $35 profit target. So minus 2.30, so $1.94 is the debit. Okay, I'll track that one, but I'm not taking that trade live. I don't know. That's way too low credit, way too low IV for right now. I'm going to just sit tight. Now, the other trade I want to construct, let's go through a couple more things. I do have some trades to get going here. Let's have at it. So FXI, just going to do a quick top down. FXI, have some stock, 26.50. That's out to the 30th. K-Web, have a long call on that. Philip Morris up to 51.49. I might be looking to roll this. I've got a January call. I might be looking to roll this up for a small credit at 52.50 if I can. I also want to see some of the strikes get filled in. Baidu and Baba. Let's see here. Baba is at 84. Baidu is at 89. I've got the shares in the 90s. I have the 82.50 by 80 credit spread that I took last week. So futures market this morning, looking at a bear trap on NQ. If we get back below 19.1, also have some other trades. A naked put at 16.7 out to the end of the month. Bear trap there. That is a bear put spread just in case for some of those potential bear trap hedges. Crude light out for a little bit. Silver. I should have some expirations on silver out. Yeah, so this not this week, but next week, 26. That should be fine. That should be looking for some full credit on silver. Out to September as well. Same thing. So watching silver closely. American Airlines up. That's fine. Apple, Amazon, BCS, Barclays taking some profit. This thing's ripping pretty nicely. Bitcoin. Where are we at for Bitcoin? I may consider a roll on FXI. If I can roll it for some credit, maybe give it another week or so. Let me check China. So FXI looking better. Still hasn't broken a recent high though. So if we have this swing from double bottoms here or equal lows, so equal lows to equal highs, I would like to see if FXI can get back to $34. But the one thing I'm watching is this high, lower high. I'd like to see if FXI can take out a previous high. Maybe this is a bit of a falling wedge. We can break and pause and continue to look higher. If this starts to turn the corner to the upside, that is a good sign. Another reason that Wall Street might benefit is maybe China helps out a little bit. global economy looks good, keep some resiliency in the stock market, and maybe we have some non-US plays in addition to the US just continuing to rip and see if we're going back to all-time highs. Let's go Qs for a second. So Nasdaq starting off just slightly hesitating right now. NQ feed, little indecision on futures for Nasdaq. My bear traps below 19.1. Dow up on the day. I had some ratio spreads. I didn't get filled. I took some profit back in July on the DIA. I don't have any fresh trades running on it right now. I could just look at some longer term puts. I think, did I take a look at these? DIA, I don't have it. So I might just look at another wide open credit spread, go out a little bit further, maybe 70 to 90 days, maybe out to next year and get something way out here at like 370 or 365. Credit spreads are fine. I wouldn't mind taking ownership of the Dow if we're going to break highs, but let's see. I might look at the Dow with a bull call spread where if I'm long the call here and then I sell a call up here, maintain some of that intrinsic value for basically if I was $5 below, if I bought like a 403 strike and then sell against it at 413, as long as we kind of stay where we are right now at 408, the trade preserves its value. And then any uptick, I can maybe get 50 cents to a dollar, go after some profit targets like 15 to 25%. The Russell trading at 213. I like seeing green on the Russell for right now. This is a trade that for this Friday, I do have a 2100 and 2050, and that's RUT. So let me check that one really quickly. This trade right here will be profit as long as we stay above 2050. The other one's 2100 out to the end of the month. So if we stay in those levels, this is a potential this is a broken wing butterfly that does have a profit trap. So if somehow I get even luckier to get closer to 2100 or 2050, then these trades pay out pretty nicely. There should be like a little, peak. If you're familiar with the broken wing butterfly, the profit trap looks something like this, where on the put side, so price is up here, and below I have I've got a bit of a tail credit. So let's say this is my risk. I'm not drawing that very well. So this is my zero line. Price is right here. I have a tail credit, and then I have a peak. Then I have my risk. So this is, about $1.15 a credit that I pulled in. Up here is around $1,000 of profit. But in order to get that by expiration, I need to see price pinned there, which is good. It's a bit of a lottery play. It works out occasionally, maybe 10% of the time if I'm lucky. But that payout's pretty nice. Otherwise, if it just stays where we are, I'll just generate the profit right there. Okay. All right. VIX had a little jump up in the VIX slightly, so slightly higher. Still have some trades in SVXY, shares at 40, naked put at 35, naked puts in the 50s. Dollar index we talked about this morning. Keep an eye to see if this dollar is going to make an actual clean break and get some follow through. If you're trading the dollar, have a stop loss in just case this thing bounces and reverses with a wedge pattern. Oil, I did make some good profit there. My trades now in oil are all the way down here towards support. I'm not trying to trade this middle area that seems to be pretty noisy. Crude light, same thing. Stop loss was below 72.50. That worked out pretty nicely. This is now done. Then I have some other trades out towards the end of the year. Natural gas probably looks okay if you're, interested in keeping price below 150. I might actually look at a broken wing on this one too, possibly. I'll see what the risk involves. Gold, we did make a fresh high on gold. I do want to see how the daily, weekly candle action here is, just because we did make a fresh high, but if we break up and then have an aggressive red candle or aggressive bear move, then I think this is a fake out. But if gold is just break and pause, then to me it still looks like this could be a nice subtle trend that once we get into open space at 25.20, then to me gold looks pretty good for another decent push to the upside. Silver's coming back in a nice way, which I'm pretty happy to see. We defended this past resistance level. That was support, and it looks like we turned at that support level as well. For me, I'm looking at silver as a potential, come up here, pause, and then our big breakout would be above 31, measure move towards 35. I still like silver quite a bit, actually more so than gold, but I'm long on both. Bitcoin sideways for right now, but just hanging in there. Couple of bear traps, couple of pullback zones. But we are making, and this is probably frustrating for crazy bulls out there. We are making lower highs right now, and we're making lower lows. So we do have a bit of a kind of corrective channel look on Bitcoin. If you're trading the ranges, this rip up here, a little pause, we come back up to these highs. The bulls, to really get excited about Bitcoin again, we're going to want to see highs getting broken. So we have yet to make new highs since March and April of this year. So for that to happen, Bitcoin's got to make a run. Otherwise, I would expect it to be somewhat channel bound right now, where the market is running into like 69, 70K resistance, possibly this 50K support. And we'll keep, I'm going to keep an eye on that one. Watch my ETFs as well. MicroStrategy, same thing after the split, just compared to Bitcoin prices. Ethereum, I'll take some ownership of EETH as an ETF. Nikkei, we talked about some China exposure. EWJ is Japan. Where's my EWZ? Here's some foreign markets. So Hang Seng up a decent amount. This is China. So we're up off the lows around 7.5%. EWZ, I'm long on this stock. I put a little dollar allocation towards it. Plus, I'm looking to buy back in at 26.50. Mag 7, pretty quiet for the morning for right now. Nvidia's had a pretty incredible comeback. Was down 35%, and I think it's up almost 30% off those lows. 37% off those lows. It needs to get up 50+% to recover those highs. That's what happens when you have a 35% pullback. Tesla's still hanging in there above 200. Bonds, we have the, looks like the yields are up slightly. Bonds are flat. Mortgage-wise, we've had a decent, a reasonable shift. I mean, the 30-year fixed mortgage is around 6.49%. With hopefully, lower levels to come. It's going to take, 6 months, 12 months until the rate cuts officially start getting into the market and are, seen by the average consumer. But we'll be tracking this closely. And then looking at the futures market this morning, this is Australia futures. It's really just trading the U.S. dollar. I mean, if Aussie futures are up, it's because the dollar is weaker. Same thing with euro. Same thing with pound. When the dollar is getting weaker, these tend to be, reflecting that. So. Okay, I'm going to get some trades priced out here. I'll probably do something on SPX and look for something kind of volatility-wise. We're trading around 55.62. Let me get a trade priced out here. I'll do this before I head out to I think I'm going to be joining A1 Trading here at the top of the hour. Let me jump into my email. Joining at 10 o'clock. So in the next 15 minutes, I'll join with A1 Trading and Nick Sayak and team. So if you want to come back into my channel here, Chris Pulver Trading, we'll be live in a few more minutes. But I'm going to craft the trade. Take a look at this. Let me float this out. Let me change the strikes up. So this was a trade. So the 23rd and 26th. So that'd be this Friday and Monday. And let me recenter this trade. So price is around 55.65. I need to bump these up and down a little bit. So if I took the trade last Friday, it was around 16.50. Now it's already up $1. So we've already had a bit of a move, but I'm going to recenter this trade. So let me edit the spread. So if I bump up the call side, so the first one I'm looking at, we're at 55.60. So I'll do like a 56. We'll do like a 56.05 and then sell the 15. Then I'll do 55 here, sell the 65. And then the put side, I'll go down to 40, 55. Let's go 55.25. On the put side, 55.25. And then sell the 15, 55.15. And then 25 to 75, 54.75. and 65. There, see what this looks like. All right. So we do have some profit traps. I do have a dead zone in here. This should be the risk of the trade. I don't know why this is showing that there's no risk. There's definitely risk on the trade, and it would be right in here. So that's going to be my risk. That's the debit of the trade. Let's have a look. Profit trap, 56.14, 56.65. So if we moved, 50 points one way or the other, I just want to make sure on the downside. I mean, I don't like this profit P&L on the equity graph. That looks like there's risk in the trade. But if I had a bear trap, bull trap, bull trap, let's see. Let me try one thing. I'm going to switch these. So if I did a sell, buy, sell, buy, sell, buy, sell, buy. Flip that upside down. Well, that's not going to work. All right. So looking at this trade here. And buy, sell, buy, sell. Proper expiration staggered out. I think I'm going to have to space these out a little bit further. So maybe the closer ones for that profit trap, and then go out a little bit farther on the second peak. So if I did the 56.55 by, let's bump this out. So 65 to 75. And let's go 65 here and 55 here. There. I'm trying, and I'm just going to finesse this a little bit, but I'm trying to get this outer part a little bit more leveled off. Instead of having, my dead zone is here with the debit of the trade, costs a little bit less right here, but the goal is to get this into a profit trap. So if I get it into, peak one or peak one on the call side or put side, that's the trade I'm going to monitor. So I think I like the trade enough. We're slightly in favor. It's not that bad. All right, I'm gonna take this trade. Let me get the legs up here. So here we go. So on the trade size, we're going out to the 23rd and 26th. So if I do the call side first, I am buying the 26th. So if I go 26th, let me do this. I'm going to start this trade. If you want to come back and join me about 10 minutes, I'm just going to take a small breather. Let's come back in at 10 o'clock and join me for another session. I'll push this out on YouTube and Twitter and all the respective channels, but I'll jump in with A1 Trading the Team. So I'm going to get this one placed, and I'll give you the components and legs here in just a little bit. Okay, let's put the live session on hold for a second. Come back in 10 minutes and join me again. So we'll take a small break. Be back at 10 a.m. Eastern Time for the live session, joining A1 Trading and Nick and the team. Okay. All right. And before you go, if you would kindly, if you're watching live, hit the thumbs up button for me. And if you're watching this as a recording, hit the thumbs up button, all that good stuff. And leave a comment if you want to, ask some questions. I had Sweet Niblets was pretty active this morning, and then I think bounced out. So anyway, I'll see you in